Hello traders, Cousin Benny coming to you from Myrtle Beach, South Carolina. It is September the 7th, 2020. In this edition of your weekend video newsletter, we'll discuss the indices, all of which sold off sharply on Thursday, finding support on Friday. Futures are off a bit this morning on an abbreviated session. Stocks are closed. While being mindful that long-term trends occasionally see these corrections of 5 to 10% intermittently along their path higher. The bottom line is we need the markets to set up properly along with individual stocks before taking new positions, as it would be very inefficient to start trading this week with the same mindset that we've had over the last few months, as the markets are in correction mode. This is an abbreviated video, but I will say that with indicators, we got 4 bullish, 14 neutral, and 2 bearish. So the short-term trend is neutral. With regard to sectors, we're starting to see some rotation into communications and industrials, along with the transports, a subsector of the Dow Industrials. We'd like to see strength in the stocks that we're trading this week as well. The IBD 50 listed here, Market Smith Growth 250, top volume percent gainers in green, and the blue dot scan candidates in cyan. A few Dow Industrials look good as well. Also keep in mind that we saw some strength in Japan and Greece for the international side of trading. While Bukowski has 5 of 5 green, which just seems a bit odd, but his CPI signal has been red since August the 18th at 29.2%, giving us a bearish signal with 153 bearish patterns, 63 bullish patterns, and 301 patterns waiting for breakout. Bottom line, we need to wait for the markets to set up properly, both the indices and the individual stocks, in addition to what we've seen in the sectors where we need to see rotation continue into the industrials and communications sector this week. Looking at the S&P 1500 for a minute, the S&P 500, S&P 400 mid caps, and S&P 600 small caps remains on a trending signal. We did have a little bit of a flattening or peak. Last week we had Thursday and Friday with distribution days, and the histogram signal, if we were to be bullish, wants to get back above 2. Now at this time what I'm thinking is that we should take our foot off the accelerator and wait for the markets to base, because there's a very high probability that we could continue a bit lower before running into support and starting to base again. Very important to wait for the base and the markets to set up before doing anything going into this week. S&P equal weight index, no stock more important than any other, did stop at the 21 EMA, closed above it after a test of a little bit lower ranges. CCI is at the 50 level, and the number of stocks trading above their 50-period moving average is currently at 72% and not overbought or overextended at the present time. On Thursday and Friday, we tested the area of 3,400, where most of the gamma profile indicated support at 34.19. That's where most of the institutions, market makers, and dealers have positioned, as you can see in this profile, aligning with the area where we saw support last week. So if we do manage to hold this area and base, I'm thinking we're going to test the 50-day, but if we do manage to hold this area and start the base, we need to see confirmation by a move in the opposite direction. I'm going to give it about 7 to 8 trading days, typical, whether it's a stock that just reported earnings. After a sell-off, it gives the indicators and oscillators time for the markets to reset, and that's exactly what I'm looking for going into this week. So we're only on day 2 of this correction, so we could see 3 to 5 more days of downside before setting up a base. knowing full well that September is typically one of the weakest months of the year. We're also watching this chart of the NASDAQ composite thanks to Martin Pring over at stockcharts.com. I'm not going to rehash this particular chart setup. Basically, at the bottom, you've got a momentum oscillator called KST. That's Martin Pring's custom oscillator. And we can see clearly the turns in 2003, 2009, and 2013, as well as 2016 most recently. We're starting to see the same thing. So although NASDAQ is extended away from its 200 period and should come in a bit before basing, like the S&P 500, it is in a setup that could see more upside into the election and to the fall and winter months. So be open to the idea that all is not lost and that we could see a follow through this week after a bit more downside or basing action in this area. S&P 500 weekly chart in the upper panel giving us a blue elder stick, an outside weak engulfing pattern, with the bond stock ratio in the lower panel. The red line starting to turn up briefly, but it's below the 65 period moving average. We did have positive news out with respect to the jobs numbers last week, which is having an effect on the 10-year yield and all other durations. A move higher in the 10-year yield would be viewed as bullish for equities. We have the PPO oscillator showing further upside is possible. Again, that would be positive for you equity traders. And as yields start to move higher, alternative investments in TLT, for example, are starting to move back below their moving averages and into the lower part of this range that we've seen over the last few weeks, having been rejected overhead at that 172 level. So if RSI continues to drift lower, you can expect to see yields moving higher as TLT moves lower. Again, that's bullish for equities. British pound US dollar forex pair continues along its trend higher. That's going to put some pressure on the FTSE and the London Stock Exchange. While the US dollar continues to base for the last 5 weeks at this 92 level, while RSI is trying to start a move higher in the short term, which will have an impact on commodities like gold and silver, which if we look at gold, you can see this 5-week descending triangle pattern, which is typically more bearish. An ascending triangle pattern, by contrast, is bullish. Descending with lower highs and a flat base tends to be more bearish. We see a lot of selling, taking profits off in this risk asset. MACD continues to move lower, volume picked up, RSI is below 50, and it looks like we could lose the 50-day this week in this reverse Kirby down to support somewhere around 1750 over the next several weeks, if the dollar does start to move higher. In addition, we see copper managing to hold the 52-week highs. We had a nice finish on Friday. That's good for your construction-related names, home builders, home improvement, and construction products manufacturers. So keep an eye on this chart as well as those groups if you're trading those equities this week. Finally, we have crude oil, which for the last 12 to 13 weeks have been in this upward ascending pennant pattern, tight price action with resistance along this level here at $42 per barrel, 43. We did have a bearish week, so if this starts to move lower, that'll be a headwind for equities as well, as this has a positive correlation to the equity market. So sectors have had a tough go of it over the last few weeks. We did manage to move higher. Obviously, Thursday and Friday were distribution days, and we can clearly see it in the sector performance. Turning more yellows and oranges last week and the previous week, and more red this week, past, while the international markets reflect the same. We did see a little bit of strength in Greece and Japan's international ETFs, so keep an eye on Greece and Japan as potential bullish assets going into the next few weeks. In addition, rotation in sectors, we still see favor in XLI and XLF, watching XLB and XLV as they fade a bit, and looking for XLK and XLC to continue, maybe reverse and move higher back into the leading quadrant. Therefore, if we do see that improvement, sectors like transports held the 21-day, closed above it. We also see XLI holding at the 21-day. 9 of 12 to be exact are above the 21-day, having tested it on Friday. So that's a good setup if we can manage to base in this area, with the possibility that we could move a bit lower as those sectors see rotation out of underperforming sectors like XLV and XLU. XLE also at the lows, they could see a double bottom at this point, but underperforming. So we'll see money perhaps coming out of those three sectors and going into XLI, XLF, which is showing performance. XLF in particular is important because higher yields are affecting those interest-sensitive stocks. Clearly displayed by watching the banking index and the bank index S&P 500 ratio. So as this line is moving higher, it's telling you banks are outperforming the S&P as a whole. Bottom line, I'll be looking at the banks and industrials this week for potential trades, if at all, once we see some consolidation and confirmation that the markets are starting to set up. So Tuesday is probably going to be one of those wait and see days, looking for positive reaction. Futures presently are starting to move a bit higher on this shortened Labor Day holiday. So here are the IBD 50 for the week. The one thing I noticed right off the top is only about 9 out of 50 are set up in any way that would interest me in trading this week. That said, I will be taking the markets with a grain of salt on Tuesday. I'll be looking for a base or confirmation that institutions are buying actively, and that'll come with our indicators like tick cumulative, maybe VIX dropping. We'll look for some confirmation in advanced decline, and we'll like to see some up volume that exceeds down volume by more than, say, 5 to 1. That would be a good indication that institutions have picked up shares very quickly, with the possibility that that might not happen this week. So look for the opening range to give us an idea of what institutions are doing and trade accordingly. So let's take a look at those 9 IBD 50 stocks that look good. One is Adobe, not my favorite setup, but it definitely looks better. It held the 21-day moving average. RSI is still above 50. We did see 2 distribution days though. So there is a possibility we could come down to the 50-day. We tested the breakout level already. There's a volume by price band as support. I'm thinking like if this was an earnings sell-off, I'd be looking for day 7, possibly day 8, which is the more bullish days of a pullback. So look for the next 5 trading days, potentially before a base setups, and look for day 8 for buyers. Now, it doesn't happen exactly that way, but analysis that Leastar has done among other people in the past has shown that 5 to 7 trading days is what you want to wait after a market or an equity has shown some distribution at highs. I'm thinking we base at the 50-day. Alibaba also looks good. It held the 21-day moving average, closed above, just below the 9 EMA, volume by price support. In this area, a breakout of this ascending triangle or consolidation pattern led to a couple of weeks of upside before this distribution on Thursday and Friday. Now, I'm very interested to see how a lot of these Chinese stocks that we're going to mention in a couple of minutes fare this week, as they all look pretty good, holding a bullish trend. Dohu is another one of those names that looks like it could bounce this week. Buyers stepped up on Friday, pretty active, closing on what almost turned out to be a hammer pattern on volume that exceeded what we saw on Thursday. So we'll keep an eye on this one as well going into the week. Berry Plastics showing relative strength, holding above the 9 and 21 day moving average by the close on Friday. RSI is above 50. We're in between this area, just below this volume by price band. So if we can manage to get back above that to 52-week highs, there's no overhead supply and Berry could continue higher. Volume looks a lot better here on Berry Plastics. Big Lots, while it's not my favorite setup, this looks pretty good too. It's holding at the 50-day moving average. We have this major volume that has occurred in this area, a base, stair-stepping higher, and then broke out several weeks ago at the end of July. A little bit of a sell-off, 5 to 7 trading days. Day 8 looking like the area where we might want to initiate a trade. All right, so that's day 1, 2, 3, 4, 5, 6. So potentially we see some action in retailers this week. Here's DR Horton. You may think the stock looks pretty ugly. The chart is pulling back for a couple of weeks. 50-day is just below. RSI is almost oversold. The thing I like about it is it's almost oversold on stochastics as well. Volume shows that there was distribution over the last few weeks. Remember, copper is at 52-week highs and could continue higher, which would bode well for the home builders. And new home starts continue to outperform. So we're looking for a base at the 50-day going into this week. VIRT, Virtu Financial, very nice bullish action, relative strength, in addition to what we saw in the financial sector. Financials and industrials are what we'll be focused on, along with the banks and financial advisors. So this one looks like it's going to break out and continue. It's only $27 stock. I liked it off the bounce on Thursday at the 21-day. Look for a little flag, maybe a better entry if you're thinking about trading it on Tuesday. Now note the volume is much higher and there's more green than red on this particular stock. So one of only 9 stocks that look good going into this week from the IBD 50. MACD is above its signal line. Stochastics has drifted below 80 and starting to turn back up. Workday, looking for this one to hold at the 21-day. Always a potential for a pullback to break out this level right here, or the 50-day moving average. We had really nice volume over a week ago, and then last week we saw some distribution. So stochastics could lead to a little bit more downside first. Just keep an eye on it. Again, the IBD 50 don't show a lot of setups presently that I'm interested in trading. So I think you should be cautious this week and not so eager to put money to work until we can confirm what institutions are actually up to. West Pharmaceuticals, another IBD 50 name that looks okay. If it bounces at the 50-day, we'll probably see about 3 or 4 more days of basing in this area, minimum, if we're going to hold the 50-day. So I hate to keep beating it up, but the IBD 50 don't really interest me that much this week. There's a few stocks that look good, only 9 out of 12, and even those 9 need a little bit more basing action before I'd be interested in putting money to work. So be cautious this week. We also want to watch these MarketSmith Growth 250 names: AVGO, Broadcom, Centos, DAR, and PWR, along with these stocks like Domo, another name that showed above average volume last week, along with GoGo, IMAB, another Chinese stock, and OMEX and NCMI. These 3 showed up on the Blue Dot scan, so they're potential as well. And the Dow Industrials, Caterpillar, CVX, Goldman Sachs, JP Morgan. Again, the banks look a little bit stronger, look more like they're going to see some upside. Coca-Cola looks good, Raytheon looks good, and Travelers Insurance might work as well. So I apologize for the shortened video. There's a lot going on the move down to Myrtle Beach, as you can imagine. A household with 4 family members. staying at my brother-in-law's house. So I'm going to cut it short. This is Cousin Vinny coming to you from theclosingprint.com. It is September the 7th. Happy Labor Day. I'll send out a watch list later tonight. Expect that's going to be a lot smaller than usual. Around 11:30, 12 o'clock. And on the East Coast around 8:30, 9 o'clock. My advice is to not trade at all on Tuesday. Wait for setups to appear and watch for what institutions are doing. Bottom line. Take care. I hope this helps, and we'll see you soon.